Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lanny Burt, the Dividend Diplomats. Guys, today we have a Dividend King that took a beating this week. We're going to talk to you about how this company that has grown its dividend for 57 years may also now be screaming signs of undervaluation.
Smash that subscribe button. Give Bert the Hurt and I a nice thumbs up here, guys, or should we say thumbs down on this stock that's been tanking ever since some news broke out here on October 12th that really sent the stock tumbling. A Dividend King, Bert, 57 years of dividend
Yeah,
growth.
I know that catches the attention, especially with those kind of credentials. And that seems to be the thing. The market is looking so hard for some good news, some news to rally, but inflation continues to climb. This sector got hit with inflation numbers once again. That
Above
coupled,
expectations, inflation's
yeah,
rising, guys.
it is interest rate going
Consumers
to be
stop spending, please, for the love of God.
That's right. You take that news and you couple it with a terrible, terrible investor day discussion. That's a recipe for a 10% price drop.
10% price drop, guys. And Bert, without further ado, what Dividend King are we talking about here? That could be a great stock to buy, or should it be a stock to avoid and wait?
Hormel, ticker symbol HRL. All right, let's talk Hormel. They are some of the biggest. They tout their brands, their brand strength in each one of their prepared food category. Top pepperoni, one of the top peanut butters. They've got Hormel, Applegate, Skippy, Genio Turkey. They got the biggest, best brands that you can find in the aisles of grocery stores. But what's the problem with big name brands in grocery stores right now in this economy, Lanny?
Well, they're pretty expensive, right?
That's absolutely right. And consumers are flocking to off-brand, to private labels to help save every dollar they possibly can in their budget.
But yet the consumers are still spending money. And also, I know there's a lot of feedback by the health conscious consumer, and maybe Hormel just
Mhm.
doesn't quite fit the bill anymore, guys. But man, oh man, that Hormel pepperoni, guys, come on, Hormel chili. I know we'll use the Genio turkey every once in a while when it's on sale.
For sure.
I'm not going to give Skippy too much
No.
kudos here, though.
No, just because it's a top brand for them doesn't mean it's a top brand in our household. So we got to remember that here as we're going through it. I thought you were about to pull out a jar of peanut butter, not a glass of water. Got to have one in every room in your house, Lanny.
Oh, yeah, you guys already know. If you don't know it by now, yes, we do kill peanut butter. Bert, don't you guys kill peanut butter? Or did you slow it down a little bit?
No, we do. Our daughters have really ramped up the love for peanut butter in our household. All right. So what else happened with Hormel here? We talked about an investor day. They had a few things that hit them here.
Yes.
First, the labor contract. That was the big thing. Much like UPS, so in other sectors, there was an agreement to increase wages at Hormel's factory. So people are getting a $3 to $6 per hour bump, getting better paid leave, getting better pensions, better 401k. First off, fantastic for employees. That's great news for employees to help them increase their budgets. However, for a company like Hormel, that's fighting for every dollar they can and every piece of margin they can, that is not great news. It's going to severely impact the company's bottom line.
I'm going to get more efficient here, guys. But yeah, I mean, operating revenue right now as well has been extremely flat, over the last, half a decade, 5, 6 years at that close to 2 billion revenue mark. So it's like, what's going to happen here? But yet they sit there and they'll tout that they're going to have 250 million in operating revenue growth and over the next 3 years. So the question is you haven't been able to do it. So what makes you say you can't increase that top line? Higher prices, maybe?
Yeah, well, luckily management has a plan. They have a strategic plan. Here are the three tenets of it. We're going to put the chart up here that shows it. They're going to increase operating revenue from 5 to 7% from their current businesses. They're going to strategic value capture for 25 plus million, and then they're going to transform their business to unlock another 200 million. So that all sounds great. That all sounds great. But much like your skepticism, Lanny, the market met the skepticism with even more of a force, and that's what drove this price down 10%. People are skeptical, just like you were. How are you going to do it if you haven't done it for the last 6 years?
Yeah, guys. So we're filming this here on October 12th. Stock price did finish down 9.83% today, almost 10% for Hormel stock. Again, ticker symbol is HRL, and they're having one hell of a year, down 29%. In fact, it's been on my watch list, gosh, off and on throughout the year. It's funny too, because I think I was looking at like $36 or $35 a share price at one point as like my next purchase entry area. Well, you smashed through that, Hormel.
Yeah, they hit that one with force here because they are now
Well,
after dropping 10% this day, they're at 32.67 per share.
yeah, they got choke slammed, got up, and fell right into the Undertaker tombstone pile driver right to the mat.
And we love it. So what are we going to do with Hormel? We're going to run them through the Dividend Diplomats dividend stock screener, see how the metrics shape up. 3 metrics: PE ratio less than the S&P 500, payout ratio less than 60%, history of increasing dividends, and that bonus metric, the dividend yield. Lanny, why don't you kick these people off and talk about that price to earnings ratio?
Well, guys, we'll see if the analysts have caught up yet, but the EPS right now is $1.77 projected, leading to on a share price of $32.67. Still higher price to earnings ratio of about 18.46, below the S&P 500, below where Hormel currently and has traditionally operated at. But obviously EPS has come down quite a bit on that labor union deal.
That's right. And their annual dividend is $1.10. That gives them a payout ratio of 62%, just a hair above our 60% threshold there.
Guys, growing dividends, they're a king. The king pepperoni king over here, guys. 57 years at an average rate of 8.17%. But it's always nice to kind of look back at, well, what was that last dividend increase, guys? Because they're now at 27.5 cents. So recently they did go from 26 to 27.5. So if you do the math, that's about a 5.8% increase, so slightly lower than historical average on the last one.
Yeah, it's not too bad. And with the big price drop here, let's go into that bonus metric, the dividend yield. Their yield is now 3.37%, well above their 5-year average of 2%.
Ooh, you gotta like that, Bert. I know your nose is tingling. Your ring ding tingling too, guys. So they're down again 29%. And to summarize here, PE is at a little over 18, payout 62%, 57 years of growing dividends, average rate of about 8%. Dividend yield didn't just cross 3%, didn't just cross 3.25, but it's at 3.37%. And I'm coming in with a quick little tidbit. I did grab one share, not at 32.67, but I think at like 32.74.
Beautiful.
One
That's a great
share,
pickup.
just to
Yeah.
grab one.
Yeah. All right. Well, that's a good segue because here's what I was going to say about like, what are my thoughts on there. I don't have a position in Hormel like you do. I think for people that have positions in Hormel, this is a great time to keep adding, keep nibbling, adding one more share, just like you did, Lanny. I think this is an excellent time to continue doing that.
Are
New
you buying
position.
more shares of 3M?
Yeah. Yeah, that's exactly what I'm doing. I don't know. I'm not doing that right now. But anyway, am I starting a position in Hormel? Not at the moment, but they are climbing very high on my watch list here. Very high. I mean, 30. Do you think you can get to $30 per share? Maybe. They hit below 30, it might have to start a position. They are a dividend king after all. And this isn't the first time they've had a turnaround story. They've had to rebuild, regrow. They're committed to their dividend. They made that a very big point in their investor day that the dividend growth is one of their top priorities. So do you bet on Hormel in the long term? That's the $1 million question.
Who knows if the pizza restaurants buy Hormel pepperoni? We need to know that, so let us know in those comments.
Yes, that's the big question here. Get us some insider information on knowing Hormel's operation so we can make a better investment decisions for ourselves.
No, but yeah, I mean, again, I agree. If you own Hormel and you really want to average down, maybe your cost basis isn't here and maybe it's in the upper 30s, lower 40s. Wouldn't be a bad time to at least average down. I don't think Hormel's going anywhere. I historically don't think food brands go anywhere. Usually they could get acquired, but you really hope that it's for the right reasons. Um, but I don't know. So Bert, you're watching it, it sounds like.
Yeah, I'm watching. I'm not running to buy them, but if they hit $30 per share, I'm not going to be able to resist at least starting a position in Hormel.
Hmm. Hmm.
Hmm.
Well,
We'll see.
I grabbed my one share, just to kind of play it out a little bit,
Yep.
average down my recent purchases because I was purchasing them, I think, in the 37 to 40 a few times this year. If I look back, yeah, 38, 38. Yeah, I was kind of grabbing them there. The first time I ever did buy them, though, was at $30 a share. So they're
And you're
getting back
back.
to that.
You're
Yeah,
back.
they still have almost 10% to go until they get to 30. So,
Yeah. All right, everyone. Well, let us know, what do you think about Hormel Foods? Are you buying after this massive 10% drop? Let us know in the comment section down there.
guys, if you haven't, definitely subscribe to the channel. Like this video, keep saving and investing, adding to that passive income total. For Christ's sake, let's get to damn financial freedom, baby.
All right, everybody. Lanny, there's one thing left we got to do for the people here, isn't there? What do we need to
Let's
do?
bring it. Let's hear it.
If you're not with us, you're against us, Jack.
That was Bert and Lanny from the DD over and out.